Before I welcome our next set of panelists and our next plenary session onto the stage, I'd love for you to turn your attention to the screens. We have some words from Her Excellency, Ms. Razan Al Mubarak, who's the co-chair of the Taskforce on Nature-Related Financial Disclosure and UN Climate Change High-Level Champion for the UAE for COP28.
A very warm greeting from the UAE to all participants at PRI in person. I am pleased to join you virtually as you have come together to advance global action on responsible investment. It's never been so clear. Climate change and biodiversity crises are inextricably linked. We know we cannot meet the goals of the Paris Agreement without nature, which provides 1/3 of the mitigation potential needed to cut emissions in half by 2030, as well as immense resilience benefits. COP28 set a precedent for the integration of nature in addressing climate change, including food systems, offering a roadmap for the journey ahead. Nature was placed at the heart of the UAE consensus with a strong call for zero deforestation by 2030 and alignment with the Kunming-Montreal Global Biodiversity Framework. These successes reflect the urgent need to redirect and realign. We need to redirect and realign financial flows with the goals of the Paris Agreement and the Global Biodiversity Framework. However, as we all know, financing for climate and nature goals remains critically inadequate. To reverse the climate and biodiversity crisis, global annual investment in nature-based solutions must nearly triple to over $500 billion by 2030. This is not merely a necessity, but a tremendous opportunity, projected to generate over 390 million jobs and unlock $10.1 trillion in business opportunities by 2030. But investments in nature have been unfairly skewed. Despite emerging and developing countries offering 90% of the nature investment opportunities this decade, they receive only 20% of the current financing. So it is crucial for businesses, financial institutions, cities, and regions to lead this paradigm shift, placing nature at the center of climate action and strategic planning. But there are signals of success, and all of you play a critical part in accelerating these efforts. Over 300 businesses and financial institutions are already supporting the Nature Positive for Climate Action call to action, which I was proud to launch as high-level climate champion for COP28, alongside my dear colleague Manuel Pulgar Vidal, the CBD Action Agenda champion. Businesses and financial institutions of all sizes across all sectors and geographies need to manage their interface with nature as their most important supply chain and value creation partner. Businesses and financial institutions are supporting this campaign through actions such as adoption of TNFD standards, science-based targets for nature, deforestation policies, putting nature in their transition plans, and increasing investments in nature-based solutions. Such actions will help create the enabling conditions for investors and capital to achieve sustainability outcomes and impact. There is no net zero without addressing deforestation. We need to drive strong demand signals for deforestation-free commodities and nature-based solutions to increase investment certainty. 33 leading financial institutions representing more than $8 trillion in assets under management, working together as part of the Finance Sector Deforestation Action Initiative, FSDA, are demonstrating that action to achieve the goal of halting deforestation is not only urgently needed, but it is also very much feasible. We need to see the adoption and implementation of these actions, and we need to accelerate those rapidly. We need to strategically deploy more catalytic capital to unlock more capital. Private capital, in fact, represents only 18% of nature finance today, just 1/6 of what is going to clean energy systems. As co-chair of the Taskforce on Nature-Related Financial Disclosures, I also am pleased to mark the 1-year anniversary of the launch of the TNFD's disclosure recommendations. With the recommendations released and adoption underway and growing, the task force has now entered its next phase, focused on encouraging and supporting voluntary market adoption and supporting efforts to address the knowledge, capacity building, and data needs and gaps of participants. The TNFD will be making a number of important announcements at COP16 next month in Cali, related to the second phase of its work. And as such, I call on all of you to put nature at the center of your climate action journey and look forward to celebrating your efforts on the path to Belém at COP30. 2024 is a critical moment to set the direction and pace for nature and climate action over the next decade. We are at a pivotal moment in a significant year, marked by 3 interlinked Rio Conventions: biodiversity, climate, and desertification, all centered on sustainable development with substantial overlap and shared actions toward the common goal of securing a safe, a healthy, and prosperous planet for the benefit of all, now and for generations to come. Your commitment to advancing responsible investment is vital as we strive for a meaningful progress on climate and nature goals.
Thank you to Her Excellency, and a great segue to our final plenary session, which is centering nature in responsible investment approaches. Please welcome Joy Williams, Executive Director for Financial Institution Transition Planning at GFANZ, who will lead the panel in a discussion. A warm welcome, please.
Hi, everyone. Thank you for sticking in to the very end, the very last plenary before we close the session, the conference for this year. So the panel is about centering nature in responsible investing, which I think is a really fitting subject for the last plenary, because I do think that this is pointing to what the future of responsible investing is going to have to embrace and start to implement. My name is Joy Williams. I'm the technical lead at GFANZ for the Net Zero Transition Plan Framework, and I have a great set of panelists for you today. We have to my far right, Eduardo Bastos, President of the Brazil Ministry of Agriculture's AgroCarbon Chamber and member of the Interministerial Committee of the Brazilian National Plan for the Conversion of Degraded Pastures, which I think Eduardo is going to talk about today. And then Dr. Joanne Q, Director ESG of Eastspring Investments. And to my very immediate right, Nicholas Richard, President and CEO of Desjardins Global Asset Management. So just a reminder, we would love questions. So please use Slido and start to get those questions coming in, and we'll try to get as many of those answered as possible in the next 60 minutes. So I've been in the ESG field a long time, actually before it was called ESG. About 20 years ago, I'm not sure they had a name for it. So sustainability, responsible investing, whatever you want to call it. Nature was never the core of it. We had trees. We talked about afforestation and deforestation, that sort of thing. But mostly it was pollution. And then when climate came along, it was energy. So the past couple of years where organizations like the TNFD have been publishing their work on nature, I've seen a complete momentum shift on just the awareness of what nature means and starting to grapple with what that means with finance. We now have PRI has the Spring Initiative, which I think you've heard about in the past couple of days. And the private sector is planning to show up in the thousands at the Biodiversity COP in just a couple weeks. For my own role in GFANS, although I am focused on net zero transition planning, you may have heard Mark Carney, my boss, talk yesterday about a consultation paper that we will have out on nature in support of net zero transition planning. And at the same time, we're here in Toronto, the Global Nature Positive Summit, hosted by the Australian government, is going on halfway around the world. And the message coming out of that is one that I've heard from the practitioners as we put together the GFANS work this year, which is there is no net zero without nature. We are not going to solve the climate crisis unless we talk about nature. So I'm really looking forward to what our speakers have to say about what's happening today and how what's happening today can point to what the future of responsible investing is going to look like. So to start off, I'm going to ask the same question to all three of you. Maybe we'll start at the end, Eduardo, with yourself. So in one sentence, let's make it quick and snappy because we are the last plenary before drinks. Why is nature important for your organization?
So thanks so much for this amazing opportunity here. It's my first time at PRI, and for us, it's clear. I'm here to talk about agriculture and food systems. Agriculture is nature, and nature is agriculture. There's a fundamental link between two of them, and 1/3 of the global it's covered by agriculture. So it's not possible to discuss agriculture without discussing nature.
Joanne?
I think I'll also add maybe a few sentences on this. So nature is actually a factor for investors to really understand from a risk and opportunity perspective. For example, understanding how portfolio companies are exposed to nature-related regulations with potential real money impact, like the Corporate Sustainability Due Diligence Directive, and also from an opportunity standpoint, especially as a nexus of climate adaptation and mitigation solutions. So I'll stop here for now.
That's great because we've had sort of from the South American, Brazilian perspective, from a global perspective. What about from a Canadian perspective?
To Canada. Well, I would say that hopefully everyone agrees with that. ESG factors have a very significant impact on risks and returns of the investments that we make. And we strongly believe that accounting for these ESG factors is really our job. We're not doing our job if we don't account for them, whether it's in portfolio construction, no matter what the asset class is, and no matter what the investment policy says. And having said that, when we know that nature is basically half of GDP, global GDP, is moderately to highly impacted by nature, it's really difficult not to make that a priority, and at least that's what we do. So yeah, that's why.
So let's just dive into this, and maybe we'll start at reverse order. So Nicholas, maybe start with you. You said it's hard to not take it into account if it's so obvious that it is. I'll throw out the dreaded material, the M word, if it's material. So what is Desjardins doing as a company on nature?
A lot of things. First of all, we wanted to get serious about nature. So about 3 years ago, we hired an advisor to fill the role of biodiversity expert in joining our team. The person brings a scientific background. In fact, it's a PhD in biodiversity to our group. And the idea is to help connect the science of nature to the realities of portfolio management and the investment process. And that's been working great so far. The second part is it's really an important component of our responsible investment policy. We have 4 core pillars of that policy, and one of them is the protection of biodiversity and natural capital. So what that means is it's integrated in, let's say, all the analyses we make on the public market side. It will also be integrated in, for example, the due diligence that we run on opportunities in the private market side. It influences the initiatives that we choose to join, and it plays a big role in our stewardship activities. The third point I would mention is we signed the biodiversity, the Finance for Biodiversity pledge in 2022. So we're joining a community working to really improve our knowledge and see what we can connect, what's a really complex issue into financial decisions. But I'll be honest with you, I think there's a lot of work still to do there. Next point is it's part of our proxy voting policy. So that policy will include very specific positionings on things like deforestation, plastic pollution, pesticides. And those positionings will guide us in our voting and also in our engagement, in our evaluating some shareholder proposals. The last point is it's integrated importantly into our collaborative and individual dialogue engagement. So in 2023, we ran 23 dialogues related to nature. By the way, we are signatories of the FAIR, so that's the Farm Animal Investment Risk and Return, and the Nature Action 100, and as lead or co-lead in those initiatives. So that's, in a nutshell, what we do.
That's quite a bit. Joanne, let's move to you as a global asset manager. What does it look like in your day-to-day job?
Yeah, so I think when we think about nature and how it's integrated in our investment activities, we come at it from two main points. One of it is the stewardship angle, and the other one is when we look at identifying potential investment opportunities. And often these two tend to go hand in hand as well. So on the stewardship side, we are part of the UNPRI Spring Initiative, which is really starting with about 60 companies or so that are geographically most exposed to deforestation fronts, but are also at the nexus of where they have most levers to policy that can address such deforestation issues. So this is really in alignment to the Kunming-Montreal Global Biodiversity Framework goals of halting and reversing biodiversity loss. And that's where we and collaboratively other investors in UNPRI Spring are really engaging with these companies to try to engage and make change, move the needle in this deforestation solution areas. In terms of identifying potential investment opportunities, eSpring actually recently launched a climate transition framework that is quite data intensive and hopefully investment practical sometime on the last week of September. So this is a publicly available framework and please feel free to look it up as well. So in this white paper, we kind of tackle a very bottoms-up approach to climate transition, where nature really sits at the nexus of such solutions. And what we try to put out in our investment framework is how to look at companies across markets and sectors, because we believe that climate change impacts all markets and sectors. And likewise, all markets and sectors have a role to play and also a role to capture opportunities in a climate change future. And under here, we adopt a very holistic view towards climate transition, where it's not only about just emissions reduction, but how companies can really tap on, or how can we look for companies that really tap on climate solutions. And that's both in the climate adaptation and mitigation front. And often nature is a very key factor within these two solutions. For example, companies tackling nature-related solutions in adaptive agriculture will not only help climate, but when done well, will also contribute to biodiversity goals. And if we look at companies from the perspective of how they are really tapping revenue from things like biofuels, sustainable biofuels, as well as forestry solutions, that falls nicely into the climate mitigation bucket. And we do think that there are potential opportunities to be made when you look for the right companies in these areas.
So what you both said sounds great. I mean, it's the top down, you've got all the policies in place which guide all the decisions. And Joanne, you talked about frameworks that like asset teams can use to kind of triage decisions. But having sat in your seats, I know it does not go smoothly. So can you maybe talk about, and maybe Nicholas, we'll start with you, Talk about what you really need to make these approaches effective. Like, what are you dealing with in the company in the day to day?
Well, I think it's what we need in terms of. Sorry, repeat the question, please.
Yeah, what do you need to make your policies really effective? Like, what's missing to actually make sure the policies
Okay.
get to the objective?
First we need we need a lot of things. We need a change in regulations. I think. Well, in fact, in Canada, we do need regulations. So, as you know, if we want to meet the 2030 Global Biodiversity Framework objectives, we need that, and there's the target 15 relates to disclosures. So if we have that, I think it's going to create some momentum, and I think it's going to help the market focus on biodiversity issues. I think another thing that we need is an understanding that nature and climate change, and this has been mentioned quite a bit earlier today, they're in many ways the two sides of the same coin, right? So rather than looking at them separately with two different processes, perhaps we can combine them in evaluating their linkage with different businesses and strategies. In our opinion, and I think a lot of people share that opinion, we're not going to be able to meet any of the net zero objectives without accounting for nature. And then I think what we need as well is it's all about data and metrics. I think there's a lot of work to be there. We need to continue to build a solid architecture and a solid base for incorporating nature into an investment process. So, for example, we're working on risk assessments where we're trying to identify material issues related to individual companies, related to the sectors and the subsectors they are part of. And then once we have that, then you can map that against different databases, for example, the MSCI biodiversity metrics, and see where we have sufficient data and sufficient coverage to do this work. And this will lead to basically a manageable subset of metrics that can be used to monitor biodiversity for companies, for sectors, and for portfolios. But you know, there's a lot of work to do, as I said, and it's evolving. So stay tuned.
And Joanne, do you agree with that? Is it data? Is it KPIs?
Yeah, I think for that question, data is certainly a part of it. But I think what could be done more to help like asset managers like us kind of really understand if we are going in the right direction over time will actually be an understanding of how us taking opportunity in nature, you know, as part of an asset manager's DNA, where nature is really considered part of our fiduciary duty, how does that then relate to the Kunming-Montreal biodiversity framework on what outcomes and impacts that really means. Maybe just to give an example, if we screen for a company that we think is taking a good approach to pricing in nature in its business model, sometimes you get two types of companies that come out. One will be a nature pure play company, like perhaps a forest developer. Or what you may find more commonly will be that nature just forms one of the revenue streams of the company. For example, sustainable biofuels in a large energy company. And that's where there is going to be need of data and frameworks to translate what does this kind of investment actually mean for nature impact at the biome level, ecosystem level, maybe at the species level as well. And I think that's not so clearly understood yet in the whole landscape of nature investment. For example, when we look at biomes, like maybe a boreal forest or tropical forest, we can understand it in many different ways. Like, are they high carbon sink type of biomes or not? Or is it more practical to do actions at the ecosystem level where companies actually look at targeting forestry solutions for like this tropical forest in this specific area? And when you go breaking biodiversity even further down, there will be differences in types of ecosystem and the quality of species inside. When you look at ecosystem, it could contain an endemic species, where endemic means that species is only found in that particular ecosystem and country, versus endangered species, which are really in need of protection, and also keystone species, which are key for the ecosystem itself to function. And lastly, how does our investment then translate into ecosystem services? Like, does an ecosystem that we are actually helping to protect through our investments contribute a livelihood to maybe indigenous populations around, or does it contribute more to preserving that diversity and that carbon sink of that ecosystem? So I think that gap from investment action to exactly how we are achieving the biodiversity outcomes of the maybe frameworks like the Kunming-Montreal Global Biodiversity Framework is something that I think we hope to see more collaboration between academia, governments, investors to bridge that dollar to impact or dollar to goal achievement gap.
So that's a lot to consider for an investor trying to make that decision and try to understand what the impact is. Let's get a different perspective here from Eduardo, because Eduardo, you have experience actually in agribusiness, and you are now getting that broader perspective over a region on what can actually be done on the ground. So when you think about this type of transition that the Kunming-Montreal GBF is asking for, what's top of mind for you when thinking about that type of transition? And do you think of trade-offs and synergies? Because we've had the discussion about climate and nature, but it's not always win-win.
No, unfortunately not. It's important for us to consider we are 8 billion inhabitants in the world today. 3.5 live in rural areas, producing the food that all of us need. Okay? Every year we lost something around 50 million that move from the countryside to the cities. So less people to produce the food that we need. More money in the pockets, mostly in the emerging markets, means more proteins consumptions. No, we can afford here to say, oh, we want to eat meat, but for most of the population in the world, in South Asia or Africa or South America, a lot of people never eat meat or even processed meat. So it's a completely different way to see the world. When you talk about sustainable aviation fuel, for example, we heard a lot about it in those days. Okay, we can produce corn to produce corn ethanol to produce sustainable aviation fuel. But for most of the countries that are producing corn nowadays, it means that you have to choose if we will increase corn production and then reduce, for example, in the United States or Canada, you will reduce the production of soybean. Okay, Brazil can produce both. We are blessed to have the climate and everything, so we harvest 70 million hectares in 40 million hectares. We grow 40 with corn, with soybean, and then the second season, the same year, we add 30 million more. But in most of the countries in the world, we have to choose. So, okay, what are we going to do? And then most of the policies move in that way to say, oh, okay, you have to choose food or fuel. It's not an issue for Brazil, but we have to follow those regulations. We cannot export sustainable aviation fuel to Europe because in Europe say, oh, okay, you are stopping feeding the world. Come on. We are feeding today 800 million people. We do have 200 in our country. And the project that we have is exactly to, okay, the world will need 900 million tons more. We are consuming today, this year, do FAO or OECD, you can choose the numbers, but they are exactly the same, 2.1 billion tons of grains. We will consume, with 10 billion people in the coming decades, 2 billion tons, 900 million more. Brazil is the fourth largest producer of food in the world. We are producing 300. The world will need 900. Okay, just to give the challenge that we have ahead. One way to increase the production is deforestation. Please raise hand if you agree that deforestation is the right way. It is not. It's not acceptable anymore. Okay, we do have productivity. In Brazil, we are producing 6 bags of soybean per hectare per year. In US, 58. We become the largest soybean producer in the world, in productivity also. So there's a few gains of productivity. So the way that we are seeing is, okay, we can recover degraded areas. No, there's a lot of degraded areas in the world. In Brazil, we have 160 million hectares of pasturelands, at least 100 degraded. In China, 400 million hectares, no, 200 degraded. Okay, give me, Edu, just for compare, the numbers, the size of Canada, 1 billion hectares. Just note for you to understand. The second largest country in the world, 1 billion hectares. Brazil is 850 million. We're slightly smaller. But again, there's a trade-offs, and you have to choose what we're going to do. I think the good point here is we can do both. We can produce and protect. There's no or, it's and. So we can bring biodiversity and nature together with agriculture to produce a much better world to all of us. If we invest in regenerative agriculture, in integrated systems, in double cropping, cover crops, and that's, in my opinion, and exactly the same from the Brazilian government, that we should move in that direction.
So that actually answers one of the questions we've been given here, saying, how do you see the role of financial investment in farmland as an asset class contributing towards nature sustainability in agriculture? And Eduardo, I don't want to put words in your mouth, but it sounds like you said you can invest in farmland, but there's a whole bunch of different processes and different ways of approaching farming. And that's how it would tie in with sustainability. Would that be correct?
Yes, and invest in the right technologies. So if a farmer wants to keep tillage the soil, and there's a reason for that, no, because in most of the countries in South Hemisphere, we learn from the North Hemisphere. Why I will have to plow the soil? Because there's snow. Quite simple as that. I have to put the snow in the bottom and bring the good soil, the hot soil, from up, and then I can sow the seeds and they will grow. We don't have snow in the south. Why on earth we do that? Because we learned from our grandparents. Now we learned, okay, we can do non-tillage. In Brazil, if you do tillage, you will raise money from 12% a year of interest rates and you will pay 12. But if you decided to move to non-tillage, you will pay 8.5. That's the kind of incentives, that we should move in order to move to the right way to improve that. Brazil today, we have 80% of non-tillage. US, for example, it's 30%. Canada is 20%. So we're doing a quite good job, but the pace for transformation, we will have to do in 10 years what we've done in the last 50. And that's the challenge that we have ahead. That's the reason that we need much more resources. And agriculture in Brazil, we use 1/3 of the money, is $300 billion every year to run agriculture in Brazil, fourth largest in the world. 100 billion come from the government, 200 from private. When you think about double in 10 years, we will need an additional 300 million. There's no such money in the federal government. So again, the challenge is, okay, how can we bring more money, but for the right incentive to do the right things that we will need, and then we can help to feed 1/5 of the world.
And I want to pick up on something else you said and maybe address this to all three of you if anyone wants to come in on this question. We've had another one about reducing single-use plastic, cleaning up existing plastic, particularly in sensitive natural environments and within developing nations, and balancing the need for clean water delivery to these same nations. So I think this question gets at that synergies and trade-offs, right? And Eduardo, you've said that in many areas, there is a decision to be made. Do any of you want to come in on that in terms of how we can balance these two needs?
Yeah, maybe I'll just add a bit on that. I think that kind of brings this trade-off question quite close to home in Asia about the banning of single-use plastics. That happened. That's happening in Asia as well. But I think what we see in a hot and humid climate, then when single-use plastics were more or less increasingly banned, was that hygiene started to take an impact, because people usually throw rubbish in single-use plastics and throw them down the chute. But once that bans start to kick in, a lot of people then started throwing raw food down the chute, which then started to increase other social problems like hygiene issues and so on. So I think when it comes to tackling the problem of trade-offs and nature, a lot of these then have to come at an understanding of the root problem, like what's a band-aid type of solution and what type of solution is a little bit more systemic. And I think when it comes to tackling band-aid solutions, not to say that they are not good in its own right, but that can't be a long-term sustainable solution. And something sustainable comes more in a generation of long-term value in nature. And I think for for this moment now, that comes in how do we look at longer term trends of more sustainable, energy systems, like how do we do more sustainable biofuel while balancing that, I think, to Eduardo's point, with good forestry, crop development, and so on. So I think there is a lot of then potential in understanding solutions to land use, and these can be monetizable solutions from real companies looking at urban planning, nature planning. And I could also talk a lot more about how the VCMs, the voluntary carbon markets, should be fixed in a way to address such high quality solutions, to increase the integrity behind the credits in order to really solve these problems while we still continue to do piecemeal but not really fully sustainable solutions for the long term.
If
wanna
I
come in
can
on
just add to that, I think in general in finance we need to do a better job of valuing nature and biodiversity. We know obviously that it's not an infinite resource, nature, and we have to, it has to be part of the calculus. Just we have it with carbon credits, but we have to extend that to other areas, and has to be much more integrated into financial decisions.
So you two have also hit another two questions. So this is great. We can just go down the questions from the audience, because the audience has asked, and this again is probably for all three of you, is the turning point in climate was getting a price on carbon. How far away do you think we are from putting a price on nature? Who wants to start?
Too far. Unfortunately, too far. I think when you think about the average prices, at least in Brazil, but don't differ too much from the voluntary markets. No, we are talking about a pure nature red plus carbon credit, something around $10, agriculture $20, in reforestation $30. So
That's in the carbon markets, or
carbon
right?
markets,
Yeah.
exactly. From carbon markets, the dollars, US dollars per ton of carbon. So yes, there is. If you think about only values, I say okay, it's there is more value to recover degraded pasturelands into forests than, for example, into crops. No, this is. But the reality is, when you do that, you will make 100 tons per hectare, which means you will make $3,000 per hectare. It will cost $5,000. I'm agronomist, I'm not economist, sorry. But it seems that, okay, it's not that good, no, because you will invest five and the return is three. And that's the reason that there's a market failure here. So the value should be at least 50 to pay all the bills. But how can we do that? How can we spend that? Every time that we move in that direction, I'm tracking, I've already been in 20 COPs, climate COPs, and sometimes I get like we call Kyoto feelings, no, like saying, okay, now we are running to get there as a global south, and then say, oh no, because nature is not that good, agriculture is not that good. What is good is carbon capture storage. Come on, so trying to reduce the way that we are seeing the opportunities, and then again, as someone mentioned this morning. It's water. No, money is like water, that it flows to the easiest way, and the easiest way won't be in the global south. And that's a challenge. If we consider that in trading terms, no, global south, we are long in nature, we are long in food, we are long in minerals, but we are short in money. And if we cannot argue more to create a better taxonomy to integrate that, the money will keep flowing in the north and not going to the south. And folks, it won't be good for the world.
I mean, to further that, I think if you compare nature with climate change, with climate change, we've been at it for quite a while longer. Too long, right? And in a way, there's less complexity with the metrics as
On the climate side.
on the climate side versus nature. We have a better understanding of the issues on the climate side. There's commitments, there's targets, net zero, decarbonization, and so forth. But yet, we have to admit that the results are not quite there yet. So I think to your point, it behooves us to get started, with a sense of urgency.
Do you think, though, because we've been at it so long in climate, and Eduardo, as you said, the price isn't quite right, what does it look like for nature? Like, should we put a price on nature?
Yes.
Is that one of the answers? But how fast can we do it? And what would that look like?
Oh, I don't know. I think it's really complex. I don't have all the answers, but we need to do it quickly.
Yeah.
Maybe I'll add a bit to that. I think it can be done as soon as we answer the question of getting more clarity on additionality in the carbon markets. Because I think a key issue floating around as to the point earlier on, like, nature is not fully priced in yet, comes down to the question of how do investors know, like when you're buying a nature credit, a carbon credit, does it provide enough additionality and integrity in removal? And I think that's a key issue in the voluntary carbon markets that everyone's trying to grapple around. The Integrity Council for the voluntary carbon markets, as well as the VCM the VCM Integrity Initiative, all are trying to come to a more or less consensus of what is a good type of carbon credit. And usually natural solutions are quite at the forefront of removal credits. So it really takes away the carbon from the atmosphere. So once there is kind of clarity around how you certify, how you quantify a good quality nature credit, and that again comes down to the question of defining the right baselines. What kind of ecosystems then are needed? What kind of level of diversity is needed to sustain an ecosystem that's sufficiently additive? That's where I think price discovery will start coming into the voluntary carbon markets. Nature will start being priced at a more accurate level, and that has knock-back effects on investors like us as well, because that will mean more price discovery for nature-based solutions. Companies will start getting more money. We can start moving more solutions away from the philanthropic bucket to something that's more commercial. And in general, then I think that's when the markets will start becoming more efficient in nature.
So you guys have touched a little bit on what I wanted to talk about in terms of what we're looking forward, because I think you've all touched on like kind of things we need. Let's take a step back and think about, for example, in net zero, when we set out to do the work at GFANZ, we thought about what was the role of investors, what should the role of investors be? And it was to move money to where it was needed. And for climate, in net zero, it was needed to scale and develop climate solutions. It was needed to support companies who were aligning with transition pathways. But when we're talking about a nature positive transition, which is what the GBF is really pointing us to, would love to hear from all three of you on what you think the role of investors are. And maybe, Eduardo, we'll start with you because you've touched on this a little bit. So maybe just to elaborate a little bit, you have you've identified the tools, you've identified sort of the things that investors can do. What is it that investors should do to increase this momentum, or what role do they play?
Yeah, I think first of all, it's to get closer to the officials beyond regulators. I think we heard that a lot yesterday in the final panel. It was a very good panel indeed. And we heard that. Now, I think in the poll, most of you decided, say, okay, no, better influence companies that will influence governments. Sorry to say that. I am an investor as Starpon. We are members of PRI, but I decided to invest 2 days of my life in the government, exactly to connect government closer to the investors. And one of the reasons is because we do not talk the same language. Quite simple as that. No, most of the government officials, besides the treasury, the treasury it's easy. You talk to them. No, it's quite easy. But when you talk to agricultural ministry, to environmental ministry, infrastructure, when we start to talk about this national plan to recover the great pasture lands, they say, oh, okay, it's 40 million hectares. Most of you say, okay, what does it mean, 40 million hectares? Say, okay, Germany is 36. No, so it's a little bit bigger than Germany that we want to recover in 10 years. Okay, what money that you need? Oh, $3,000 per hectare plus 40 million, $120 billion. That's the money that we need. And they say, okay, we want to do that in something around 12% to farmers. If they capture carbon, if they zero deforestation, 10 years later, they will pay 6.5. That's the kind of incentive. But how can I raise that money, in order to implement that? With partnerships. And how can I convince the government to say, okay, once we did that, 40 million, 12, 28 with grains, which means 300 million more, double the production in Brazil, we don't have railroads to export 300 million more. We don't have ports to export 300 million more. We don't have silos to export 3 million more. So we will need this kind of blended money, in order to bring catalytic fund, bring all kind of money to understand that, okay, for some infrastructure, it's long term. For agriculture, it's 10-year term. From some of the inputs, it's just a 6 months term. And most of the companies, when you talk to the big traders, big input companies, machineries, wow, Edu, count on us. We can do that. We can guarantee like offsets. So it's much beyond financing itself, but it's also about insurance. It's also about off-taking. So you can price the companies that you are investing to say, look, there's a very nice project there, help them with, for example, off-takes. So it's not that big deal as only money, please. We need 120 billion, but we can go beyond. And if you really want to do that, we must go. So that's...
Joanne, what do you think? Is it more than just money?
Yeah, I think in terms of what investors can do, I think to answer that question, yes, definitely it's more than just money. What investors can do is the money part. Like where we are best placed is to best allocate capital to natural solutions that make sense to generate returns in a portfolio. What we can also do on the to like kind of mitigate the risk side is to make sure that we are doing due diligence properly, to make sure that climate solutions, for example, do not disadvantage nature, or nature as part of climate solutions start to form a returns profile that is acceptable to the people who buy into our funds. But I think when I say it's more than just money, it's more like how do we get this at scale, and this will need the cooperation of like players beyond just investors, like governments and like MDBs for the blended financing part to scale up capital to bring in the right price to nature. And I think that comes back to the point on the mechanisms like carbon markets and so on, where we need better price discovery. So I think that's a huge ecosystem that needs to work in place and in scale in order to help to amplify the individual efforts of investors that we're doing on maybe a fund to fund, deal by deal basis. And I think one key point that we also need regulators to tackle is to look at re-understanding risk and how when they apply it to financial institutes. For example, just throwing it out there, what would be really useful will be a regulator that says that maybe I can give a bank some capital relief when I look at when banks are lending towards nature-based projects that are doing good to the environment. So that kind of re-understanding of looking at climate and nature risk may actually really fundamentally change the financing and investing landscape in nature.
The only thing I would add to all of this is stewardship. We are investors. Our lever is we're shareholders in the companies that we invest. And I think, in our experience, engaging these companies, most of them, they're quite receptive, they're quite open. They want to adopt the best practices. Most of them want to be responsible. And I think we need to get to a point where the markets can reward them for adopting those best practices. So I think that, and obviously speaking through our through money, as we said, buying and selling and punishing the lesser players.
I think if you take the answers from all three of the panelists, you basically get what the PRI was formed to do, is to really activate the investor community through collaboration, through stewardship, through education, through liaising with government. So I love that you three, and we did not rehearse this, this was totally off, that the three of them came together with like that. So we have 3 minutes left, so a minute each. What I'd like you to put out there and to leave our audience with is maybe a challenge about what everyone can do when they go back to the day job. Because they can all go back and they can all Google agriculture, sustainable agriculture, all of that stuff. So what would be the one, maybe two things if you're super quick, that you would want everyone to go back to their desks to do? Joanne, let's start with you.
Yeah, I think there's a famous saying going around, do not let perfect be the enemy of the good. So I think what the audience, or in your capacity as like real world economy participants, investors, academics, NGOs, and so on, will be to just take a first step in wherever your organization is. For example, I probably can speak to the example of the investor a little bit more clearly, where all you need to do is maybe first just understand how you can put in processes to ensure that you are trying to minimize deforestation as much as possible. That could be just 1 or 2 more questions in your due diligence checklist, just to make sure that companies you are looking into have appropriate environment and social impact assessment before they do, for example, a greenfield project. Something like that, or as stepwise as that, I think it's already going one step towards helping collectively, going towards helping nature to kind of recover, stop deforestation, stop biodiversity loss in one way or another. So just one simple step may actually go a long way if we do it at scale.
Eduardo, Joanne took 30 of your seconds, so super quick. What's that top tip for everyone?
Don't take understanding as a given. The knowledge that you have, but most of the people, they don't. So please talk to regulators, talk to governments, talk to all other stakeholders to guarantee that if we can combine our knowledges, we can solve the issues in the world in a much faster, in a much better way. Thank you.
Awesome. And last word?
Be clear and be intentional about it. Make it part of your mission, of your core principles, of your responsible investment policy, and do something about it. And to your point, don't wait for everything to be perfect. It's not going to be perfect for a long time, but there's enough out there to get started. And the responsible investment community is a friendly one, even amongst competitors. So talk to people, get organized, and start now.
And I would leave you with this when we were doing net zero transition plans, my favorite quote was the CFO of this really large international bank got up and said she did not want to do this plan, but they had to. They made a commitment, and through doing it, so starting, not making the perfect be the enemy of good, just taking the first step, she figured out that they knew so much more about the company than she thought that they did. So I think that kind of wraps up what we've all said. Please thank our speakers today. Thank you very much.